The US stock market just had its worst week in years. It all started with new tariffs. These are taxes on goods from other countries. President Trump imposed tariffs on goods from China. The goal was to protect American businesses. However, China retaliated. They placed their own tariffs on US goods. This back and forth sparked a trade war. This war has made investors very nervous. The tariffs are already hurting the US economy. Companies are paying more for supplies. This is leading to higher prices for consumers. The stock market is reflecting these fears. Investors are worried about the future. They are selling their stocks, causing the market to drop. This trade war is a major threat to the global economy. The US and China are the world's two largest economies. A trade war between them could have a ripple effect around the world. This could lead to a global recession. The Trump administration has defended its tariffs. They argue that China is engaging in unfair trade practices. However, many economists disagree. They argue that tariffs are harmful to both the US and China. They are calling for a negotiated solution to the trade war. China responded swiftly to the US tariffs. They imposed their own tariffs on a range of US goods. This included agricultural products like soybeans and pork. These are important exports for American farmers. China also targeted tech components. This could hurt American tech companies. China's tariffs are designed to inflict pain on the US economy. They want the US to back down from its tariffs. This tit-for-tat response has escalated the trade war. It has made a resolution less likely. The Chinese government has accused the US of protectionism. They argue that the US is trying to stifle China's economic growth. China has vowed to defend its interests. They are willing to endure short-term pain for long-term gain. This trade war is a test of wills between the US and China. Both sides are digging in their heels. This is a dangerous game of chicken. The global economy is caught in the crossfire. The stock market reacted immediately to the trade war. Major indices like the Dow Jones, S&P 500, and Nasdaq all plunged. The Dow Jones, a key indicator of US stock performance, fell dramatically. This drop was the worst since the 2020 market crash caused by the pandemic. The S&P 500, which tracks a broader range of companies, also experienced a significant decline. This drop wiped out trillions of dollars in market value. The tech-heavy Nasdaq suffered the most. It entered a bear market, signifying a prolonged period of decline. These drops reflect the fear and uncertainty in the market. Investors are selling their stocks and moving their money to safer assets. This is putting further downward pressure on the market. The volatility is a clear sign of the trade war's impact. Section 4. Beyond tariffs. China's strategic economic countermeasures. China's response went beyond just matching US tariffs. They implemented other economic measures. One strategy was curbing exports of rare earth minerals. These minerals are crucial for manufacturing smartphones, electric cars, and other high-tech products. This move could disrupt global supply chains and hurt US tech companies. China also hinted at reducing its purchases of US Treasury bonds. These bonds are how the US government borrows money. If China stops buying them, it could make it more expensive for the US to borrow money. This could weaken the US dollar and further destabilize the global financial system. These actions demonstrate China's willingness to use its economic leverage. They are targeting areas where the US is vulnerable. This strategic approach aims to maximize pressure on the US to negotiate a resolution to the trade war. Section 5. A global shockwave uncertainty grips investors and consumers. The trade war's impact extends far beyond the US and China. Global markets are rattled by the uncertainty. Stock markets around the world experienced declines. Investors are pulling back, fearing a global economic slowdown. The escalating trade tensions are also fueling fears of a global recession. Economists predict slower economic growth and higher inflation as a result of the tariffs. This uncertainty is affecting consumer confidence. People are worried about rising prices and job security. This situation highlights the interconnectedness of the global economy. Actions taken by the US and China have far-reaching consequences. The trade war is a stark reminder of the importance of international cooperation and the dangers of protectionism.